You're listening to the audio portion of Workshop Wednesdays. Workshop Wednesdays is a free live discussion about topics affecting accountants, bookkeepers, and business owners. You can join the ABO group in Facebook to participate live Wednesdays at 10 a.m. Pacific Time. Just search for ABBO in Facebook. This podcast is brought to you by Schoolofbookkeeping.com, where you will learn, grow, and build a thriving bookkeeping practice. We have hundreds of lessons with almost every aspect of the industry. Start your free month today at Schoolofbookkeeping.com.
Well, welcome to another Workshop Wednesday. It is Wednesday. I am Dan DeLong, and you are?
I think I'm Carrie Tom, and I'm alive. It's more
working from grandson's nursery.
That's right. I'm in the grandson's nursery. It's a little quieter in here because he's too newbornish to be in here. So it becomes a good auxiliary to my office.
He's not actually in there, though.
No, you would know it. You would know it. He'd make his entrance.
Gotcha. Okay. Well, today we're actually going to be talking about coming up with School of Bookkeeping this year. We want to come out with a course all about inventory. Because that's a hot topic, and it's a topic that a lot of accountants and bookkeeping professionals kind of steer clear from.
Which they shouldn't, because it's great consulting opportunities.
Right. What are your thoughts about inventory in general as you might take on a client? What are some of the nuances that kind of get people screaming for the hills?
Well, they don't usually understand what cost of goods is, cost of goods sold. The very first customer that I had, they ran out, and this is how it usually works. They run out and buy software, and then they call me to help them set it up. And it was point of sale like V1. It was a long time ago. And they go, I know it can do this for me. You're a QuickBooks expert. Help me. That's usually how it goes. And I'm like, inventory. Oh, interesting. And I'm smiling real big and thinking, what in the, I don't even know. I have no idea what to do. The program's going to do it for me. And it was nothing like that. I had to actually understand what the customer wanted to know was, okay, I bought something for X. I'm selling it for Y. Am I making money? And it sounds great in theory, but like we've learned, if you don't set it up right, it's a disaster.
Right. And that's a big part about inventory that I think businesses and some accounting professionals tend to have a challenge wrapping their head around,
right?
Because and you hit the nail right on the head there with cost of goods sold, right? So it's there's that when do I account for that expense, right? I bought a whole bunch of stuff that I'm going to sell. So that's an expense, right?
No. And this is where the balance sheet course that we did is so important, because if you don't understand that they're buying inventory that's going to sit on hand, that's like buying a truck. I mean, it's sitting on your balance sheet. It's a value. So the cash is flying out. And another reason to understand what the cash flow is. It's got value to it, but you don't want to record that profit on that sale until you actually sell it. So it has to sit somewhere.
Right. So when you actually purchase inventory, it's a three-dimensional accounting,
yes.
Right? So when you purchase the inventory, the value of that inventory goes into an asset account,
right?
Which is oddly enough, it's
account.
Named inventory asset.
And leave it alone. QuickBooks
Right.
does that for you. So cash out, inventory in.
And then when you sell these individual
widgets,
then it takes the value of that, that cost of that one item, and then recognizes the expense, and that is cost of goods sold. So so some people will say, like, well, it's cost of goods sold, so I'm going to recognize it all in cost of goods sold when I purchased it, but it's actually cost of goods when it's sold, right?
Right.
So
and then the other piece that they're skipping, that they often skip around, and because that's the three-dimensional part, is okay, and you sold it, but you sold it for the higher price. So that's the
Right.
cash in and sales,
Right.
but it's got to relieve the inventory at cost. So it's a
Right.
complicated thing that it's, if set up right, it's beautiful in the background.
Right. You know, QuickBooks, when you set up an inventory items in QuickBooks Online or desktop, for simple. Now we're gonna talk about simple, or you call it light inventory in
Light,
QuickBooks Online.
very light, very basic, very
Right,
basic.
but and that's this first part of this workshop series that we're going to be doing is where QuickBooks Online will work for
Okay.
that. And that situation is I buy stuff and I sell that stuff. I don't do anything to that stuff before
You don't
in between
pre-order it. You
in
don't have a
between
sales order. I mean, you
right
can pre-order it to
yeah
stock the stuff.
in between buying and selling, nothing happens to that stuff, right? I don't modify that stuff. I don't move
Hold it
that
for a
stuff.
customer.
I don't put it on, take it off the shelf, or I need to know where that stuff is
Not a multiple
before
inventory.
I sell it. It's just I buy it, I have it, I sell it. I don't do anything to it. So clothing, uh, any kind of widget that you don't modify is an okay type of thing for QuickBooks Online to be able to handle that as far
But
as tracking your inventory. What you got a big butt?
I just have one but. So oftentimes we get, well, you know how this goes. We'll get leads of people that are asking, okay, I want to move from desktop because I hear all about online. Well, they are reliant on, the ability to do a sales order, which is like he's talking about. You're doing something weird. You're basically saying, okay, this is for customer A, and I'm not going to accidentally sell it off the shelf. I'm going to hold it and run through the process. So online does not have the ability to do sales orders. So if you or your customers require sales orders, then you need to stick with the desktop version and host it if you need it access anywhere. That's the
Right.
big.
Yeah, that's one of your pet peeves is that QuickBooks Online does not do sales orders, and the idea of sales orders, or the core functionality, is that transaction type will put a hold on your inventory, your quantity on hand, so that you don't happen to sell that out from underneath one of your own customers, right?
Right.
And an estimate, which is a non-posting transaction, doesn't do that. It doesn't put those things on hold or take them away from your available quantity, like a sales order, work order, or other customer order type of transaction, which will segregate or delegate that transact or that item, so that you don't accidentally sell it out from
Right.
underneath one of your customers, because that would be a bad experience if you do. It's, oh yeah, I know you put that special order item on hold, but I sold it. I'm sorry.
Yeah. Oops. Last T-shirt or whatever it was. So
Right.
That's where you want to steer to the right product for that.
Right. So I have QuickBooks Desktop up here, so I'm actually going to show that. But now Zoom decided to hide on me, so I can't share screen. There we go. All right, there we go. So we're going to show that up here. All righty. So in QuickBooks, when you have your item list, you have multiple different types of items, and you have these parts. This type of item is called an inventory part. We'll talk about assemblies next time. So this again, that's something that you do in QuickBooks to that item before you actually sell it. So that's not something that we're going to talk about. So just the inventory part, here we see the 3 dimensions, right? So as you're creating the item, and I'm sorry this is tiny on the screen, and I'm still working on trying to figure out how to zoom in. Well, what if I no, control doesn't do anything for me. Okay, so over here on the purchase side, you do have the option of putting in your cost of goods sold account. So there's your COGS account, and then that's and then on the sales side, then you have the sales price and the income account. But down in here at the bottom, under the inventory information, is where you have your asset account.
Yep.
So that's the
three
third
pillars.
dimension, right? So if we
Yes.
have, if I go into a service or a non-inventory part here,
It's just
you can
one
see
here.
that it just has those two sides. So the purchase description and the sales description. So yes, you can choose the expense account to go to cost of goods sold and treat this item as a cost of goods sold. But when you purchase it, it will post everything to cost of goods sold or whatever the income or the expense account that you specify. And so it'll be the whole thing. So I'm working with
it makes your reporting not as, it doesn't help you manage the inventory to make sure you're making money on it. Just
I'm working with a jeweler, and he orders from China, and he has to pay for his inventory up front.
right.
So he's got thousands of dollars, and when I originally started working with him, he had these thousands of dollars showing us cost of goods sold on his profit and loss, and so what that does is it makes it nearly impossible to tell what your profit is, because his cost of goods sold was so high that he had to get to a certain point in revenue to surpass that. But what this does by doing it this way, it allows you to get the gross profit of your sales as you're selling them.
Mm-hmm.
Right. So
you can't have it both ways. You have to pick one, and we don't recommend this way.
Right. So we'll just escape out of that.
Yeah, just don't go there.
Right. Now, whoops, I went into the service item. Now, one thing about QuickBooks is that there are a couple different cost methods when we're talking about what actually shows up on the profit and loss in terms of what the cost of each particular item actually is, right? So QuickBooks Desktop defaults
always average cost.
Right, defaults to average cost. So as item costs change, per item, QuickBooks is going to calculate and be constantly recalculating what the average cost of an item happens to be. So if you buy 10 today at $10 and then 5 today at $15 or 5 tomorrow at $15, it's going to then take into account the total amount that you purchased, the total individual cost, and provide an average cost. So when you sell one of those items, it's going to do that on an average basis. QuickBooks Enterprise and QuickBooks Online calculate it based on first in, first out.
Well, so QuickBooks Enterprise, you can select
the Platinum.
It still does. Yeah. The Platinum gives you the option.
Right. Platinum gives you the option to choose FIFO, first in, first out, or not.
And QBO gives you no option. It is what it is.
It always will do the first in, first out. So that in that example of 10 at 10 each, then it would calculate $10 for each item until you've depleted that supply of 10, and then go into 15 for the next 5. So that's a word about cost, and this is why some people run for the hills when they are approached by a customer who uses inventory, because one, the cost calculation can be tricky, and two, this whole three-dimensional process of when I purchased these items, it doesn't actually show up on my profit and loss. So, Carrie, is there any horror stories that you have about about inventory?
So, yeah, I mean, every project that I've run into that has inventory, we have a horror story, and it's usually around they didn't set it up right in the beginning, or they didn't maintain it right, and I have to go in annually and clean it up. So some gotchas are when they're not receiving their inventory, that's a gotcha. If it's mapped wrong, they don't have the cost of goods, sales, and the asset right, that three-dimensional. And what's nice is you can go and fix the mapping and have it'll ask you, do you want to update all transactions? Yes, but then you need to be cognizant of what was filed with the tax return. So it's tricky. And to untangle one of these doozies, costs a lot of money. And if the customer doesn't value that, you might get yourself into trouble, or as an employee of a company that tracks it, or even as their consultant. So key is the structure. Make sure the structure operating as, and make sure if you're going to help somebody do this in whatever role you are, even if you are the owner, that you understand the concept of inventory, because it isn't easy. I had to learn, I had to cut my teeth on it, and I had to actually lose my time, lose some consulting hours just to understand this 3D concept. So
not to mention sleep.
Sleep. Yeah, forget sleep.
All right. So here is actually, after this workshop, I'm going to be talking to this jeweler guy. Right. So we have this is his sales for last year, and we just started using inventory mid-year. So we're doing this all, while we're changing the wheels on the car while
the plane is still flying, and they're changing the engine.
Right.
Changing the oil, make it messy.
So he has a whole bunch of items that don't have any cost associated with them. There's no inventory on hand, so we have to go back and kind of piece that back together. And he was using another system to manage his inventory because he sells online, and so there's a whole lot of moving parts to this. And so we're going to have a nice conversation in half hour. I'll let you know how it goes out, how it turns out.
And this is a really good place to understand, if you can, no matter where you fit in the puzzle of what you need to know. But understanding inventory, this is a huge chunk of an investment that a company makes. And whether you're the owner or the employee, you've got to, and get out a lot of highlighter pens too. That's helpful. Write out those journal entries. Go back to old school accounting. Like I said, cash out, cost of goods is the offset. That's when you put it in. No, I'm sorry, it's not. It's inventory. And
Trick question.
See, there you go. So write it down, understand that mapping, and get down into the weeds of how this works. Simple inventory. Don't start with assemblies, which is where we're going in our future. That's more complicated. It can get worse.
Yeah, and this is a simple inventory situation. He does not do anything to the merchandise after he buys it. He just puts it on hand and he sells it. But he wasn't tracking it at all, right? He was just putting everything to cost of goods sold, purchases, however he wanted to recognize it, and then wondering why, what his profit is, and he has no idea about that because it's not being tracked appropriately.
So that's exactly the example of why you don't want to do cash basis or non-inventory, because you're not counting that asset. It's not counting as an asset. So you literally lose the management of what's going on. And 1 year is going to look terrible. The next year is going to look too high. How do you budget? How's your next year going to be? It's literally impossible. And QuickBooks gives you those tools. You need to take the time to set it up right and get that tracking for you.
Right. Now, we have created a couple courses already of setting it up right the first time.
Yes.
Of course, this is not the how do I fix it type of situation when I come into a horrible mess.
Yeah, we all have. I have scars, like scars.
PTSD.
Terrible. And fatigue.
But I did put in the links in the Facebook comments for each of the courses that we have. One for QBO, and I got to give props to Carrie. She actually did a course on setting up QBO.
I did, and you can track it. It's just as basic as can be. Don't short sell yourself if it doesn't, give you exactly what you need.
Right. Now, if you if you have to, if it's a gotta have to be on QBL, there are third-party applications that allow you to track your inventory and manage your inventory and synchronize that information to QuickBooks. And we'll mention and talk about those, when we get to that point of where we need to manage those things. But of course, the ideal situation will be, do everything in one tech
product.
Yeah, thank you.
Ecosystem. So you're not doing when you bolt on, then you have, more training, more support. You need to make sure it's a company that's going to stay forever. It just adds some more wrinkles to it. But anyway, that's to come. And then drop in the balance sheet so they understand what we said.
Yeah. So we have a course about understanding your balance sheet. So that's really
and the cash flow, because the cash flow talks about increasing that assets. We already have a lot of material that you could be learning the basic concept.
Mm-hmm. Yeah. So this is Mr. Rogers' version of inventory, the buy stuff and sell stuff, and then we get into the Sesame Street of these are the inventory people in your neighborhood.
Right.
We talk about the more advanced stuff, and then we're talking about I don't know what's after Sesame Street.
We're gonna get to electric company because it's so crazy.
Zoom.
Zoom. Because we got to clean up on aisle something. That's definitely.
All right, so thanks for joining us today for a Workshop Wednesday. Carrie, it's good to see you, and we'll see you next time on part 2 of inventory in QuickBooks. This will be the I buy stuff, I do something to this stuff, and then I sell this stuff.
It'll be heavy on not to break anything, but it will be heavy. We'll be talking desktop next week. not to give you a sneak peek, but things you need to know.
Right. All right. Well,
have a great week.
Next week.
See you next week.
Another Workshop Wednesday. Bye.
Bye.